Good evening traders, it's Samurai Trader here, about to give you a recap of today's action and the training session that we had on the NQ133. As most of you know, the NQ is my favorite market to trade. I believe it, you get some fantastic, well, don't know, I know we get some fantastic movement and volatility in the market. Because I'm at the moment based in Australia, working on Australian time, which you'll see on the bottom of the screen up here, I just thought I'd just put in there that where I'm starting here is from 8:40 a.m. exchange time. What I wanted to point out today is to show what a fantastic trading day that we had, and mainly trading either the T1s and the T2. You hear me talk about in every training session, every coaching session, becoming a specialist, and you'll just become so much more wealthier by becoming a specialist. And T1s and T2s fire off virtually every single day of the week. Now what I am going to also do is quickly in a moment bring over the market, the YM, and just have a look at that towards the end of the day, and I'll show you why I prefer the NQ and some of the differences. As much as we still had some fantastic action, the NQ has been very kind to us. With the black gold oil today, it was very quiet. Of course, we've got the crude oil inventories tomorrow being released, and as I mentioned later on in the screen, I typed in when we were doing our session was, of course, we've got the FOMC announcement. So you've got to be really careful trading the markets the day before, and particularly that day. Now some traders won't even trade on FOMC days because of the volatility, the slowness, and all sorts of things happen in the market. So please be very careful tomorrow. So let's have a look at the chart here. Now of course we can see here the cyan line is our 89. Now that's our guide, our market guide, and we can see the purple line above is our 200. So, and let me just, sorry traders, I just forget to do this every single time. Let me just larger white one. So we can see here we had a lovely bounce off the 89 and 200 at around 8:40 a.m. US time. Now most of you hear me talk about my minimum profit target is 11 to 13 ticks. Why? Because my minimum stop is always 11 ticks as a bare minimum, and quite often and I'll go out and blow it out to as much as 13 ticks. Now one thing to keep in mind is your profit targets. Now I don't have the pivots on this screen here right now either. Some and you'll see later on today, some of the trades I took, I was aiming for previous lows or highs. Now for an example, this particular trade here, as a minimum you'd really want to go down and test this particular low. So where I say 11 ticks, if that was say 16 ticks, I'd be going for 15 ticks as an example there, because you want to test these lows, because usually what's the market usually come down and do? You'll either break through, test it, or whatever before you get the bounce. So this is one of the ways you can go and achieve a higher rate of return, and it's better if I show you during live trading hours. I show you these as I take these live as a better example. But going back to this, okay, so we had a T1, beautiful bounce, lovely trade. Another one we had then, this one was also a T2. You actually could have got in one candle earlier, except remembering we're really waiting for our zero line to turn magenta to confirm the trade. Another T2 down here, we can see a T2 is a slingshot, beautiful one there. We had a lovely one here, another one here, starting to get a bit messy. That is, our long-term stochastic started to come up, and of course we didn't have our zero lag roll over to here. A T1, now quite frankly, if your target was $200 per contract per day, which we'll talk about more in a moment, you would have wrapped up and finished for the day within your first half an hour or so. So look at all these. You've got an 89 bounce. Here is another one, beautiful trade. T1, if you're waiting for the zero lag, this is T1 and a T2, you wouldn't be until down here. Here had a straight T2, still very lovely profitable trade going down here. Let's ignore the counter trend trades here at the moment. T1s. You can see the trend just continued, and this is where the counter trend traders really get slaughtered on a strong trending day, because where you've got these coming down, you can really be hammered. Down here we come up here, we tested the pivot, we rolled back over again, so we had a T1 off a pivot. Down here we had a little T1 here. Now you've got to just be a little more cautious when you're just above a pivot here. You can see when you have your trade entries. Why? Because look what happened, you had a bounce. Now what you also had, you had a T19A. Now T19A is what we also call, of course, is a divergence trade, or two hills. And the reason we call it an A compared to a B, see here, you come down, you go up, and you come back down. So you've got, if you like, a hill and another hill, a hump and a hump. And then in this particular case we had a slightly lower price and we're off a pivot. These are just fantastic trades when you see them, but it's a counter trend trade. So where you do see these, traders mark these up, because remember, we do get a fair amount of dead time at times when we're trading. It's good to start the practice to mark these up anyway. Further along here we had a change in market direction. This is basically what we call a T10. We're heading up. We go through here. Now what about this one here for a short, because you've got a 200 bounce right here? Well, here, traders, where we've got such a strong uptrend and we only get a little flash of a change here, and the price did not go down below here. So I won't go into all the rules for a 200 bounce right now, but it didn't qualify. We had this trade here. You wouldn't have been out if you're after 11 to 13 ticks to somewhere in this region. You had this trade. Your stop, of course, is 2 ticks below here. So this trade here, if you're waiting for your zero leg, you wouldn't have been in till over here anyway, so you still would have been in this particular trade up till there. Now you can just see they're firing. Let me just move right along where we've got some real activity happening here. Now we had a T1 with a pivot bounce right here, and as you know, we love those. That is, you come down, you've gone through a pivot, you've come down and tested the pivot, and you get a T1 plot. You're heading in the direction of the 89 and the 200. These are just beautiful trades to take. They're a lovely trend trade, for a very safe trade. You've got a small two hills divergence here. Now one other thing I'll explain about this one here is that, of course, you've got angulation. You're moving your price for this is for the divergence traders. Your price is moving away from your 89. Now down here we had a beautiful 89B, an 89 bounce plotted by a T1 signal. Now your stop would be where? It's either going to be under your pivot, or 2 ticks is a minimum below your closest swing low. Here you come down and you tested that to the tick. So you went up, tested it, but then away it went. And look at this here, you had a divergence with the trend. Now traders, when you have divergence with the trend, they're just, you know, these are the ones where really you are really, well, they're a great 85–90% trade, generally speaking. Now once again, you stay within your money management rules, because Murphy's law is you go and put the farm on it, which I talk about all the time, and they fail. So once again, stay within the 2% money management rules, but really they're just a sweet trade. And if you go back over a chart and just traded these alone, like for T1s, like for T2s, you're going to have a fantastic life. Excuse me, traders, let me just put this on hold. Moving right along here, we had here a go away telephone. We had a little T2 here setting up. Now the comment here, as the gap grows, or as the gap moves away, or price action moves away from the 89, beware that you're going to be heading towards a potential pullback. Okay, so you don't have a lot of room, but what else is there here? I've got what have I got above here? It's a pivot. What do we usually do? We usually test the pivot or bounce off the pivot. So in setting a profit target, you definitely want to what I call front run your pivot, which is what we did, because you're usually going to either touch the pivot. Yes, you might punch through, but you don't want to risk losing a trade here by, just say for an example, if we're a bit closer, having our 13, 15, 20 tick target, whatever it may be, well above the pivot, because time and time again you bounce off these pivots. So please beware there. But also the other awareness is you're moving right away from the 89. Down here we got stopped on this particular trade. You can see, look, in a way perhaps we shouldn't have taken this one, but you can see here because the platinum has moved down below the zero line, and look at this for a fall away. So look, all the signals are there, but once again, quite often you have the signals there and it keeps moving. So you sometimes woulda, coulda, shoulda, you just don't know what to do. But anyway, so we got stopped on this one. We had a beautiful 89 bounce on this one here. Once again, look at this here, and how many bounces do we have? A lovely bounce down here, you've got a nice bounce here. These 89 bounces are just such a sweet deal. So there you got up, you front run your pivot there. Here, come back down, tested it. If you're waiting for your zero lag, you didn't enter till over here, but once again, another beautiful 89 bounce. Now I'll go along, so I just don't want this to drag too long, but look at this, another 89 bounce, another 89 bounce. We had an 89 and a pivot bounce. Now a T89 traders is where price action or our entry is outside the channel, and where these really work is that when you've got triangulation, price is outside the channel and you get a pivot bounce. Okay, so you've got all of these things working for you. Now when you've had such a good run, like here, you'd be up for I think it was per contract, now we're up, if you'd have taken everyone, about $700 by now per contract, and we're only a few hours into the market. Here, these you might start to, okay, I'm willing to take maybe have 2 losing trades and quit for the day. And I won't go into money management here, but one of the rules of course is once we're up to our target, if we keep going because we're in such a sweet spot, once I have a drawdown pullback, I'm not willing to give too much back before I'll finish for the day. So here you had a beautiful trade here. If you had have entered this one here, you would have been stopped. But generally speaking, and please write this down, when you have a trade against a really big T89, quite often you'll have a failure. So be very, very careful in trading against these trades here. I won't talk about this one here, but let's focus on here. We had an 89 200 bounce with a pivot. Once again, what do we say about those? They're just fantastic. When you bounce off the pivot, your entry was not till here, but you're in the direction of your 89 and 200. So once again, we are trading with the trend. This is another T89. Now we went through the pivot. Now look at this here. Now you can see here the price action is outside, so you've got that big angulation. See the wedge that we've got here? If you are going to take counter trend trades, unless you've got the wedge or what I call a bubble formation, forget it. Don't do it. You may as well go and burn your money. Down here we had a nice 89 bounce, bounced up, but there was a danger sign straight away here. What was it? We're right at the pivot. We ended up forming a T7, a double top right here. Then the market collapsed away. Let me move along here. We had okay, now we had a 200 bounce here. Now this is where the zero lag saves you time and time again. So here, as most traders know, we love the 89 bounces, as we had another one here, and we love the 200s, but we wait 99% of the time, we'll wait for the zero lag. Now see the zero lag coming down, then it finally kicks up, but price action in our entry was well below here, so it was no longer qualified, and it ended up turning into a T89 with a pivot bounce. So this was totally disqualified. Now traders, these are relatively easy to learn once they're explained to you correctly, and once you go through your coaching. We come up here, you can see our 89 is now rolled over. We've got a beautiful T89 bounce, and away we go again. 89 bounce, we're following the trend. Then let's just move along here. We can see here we've gone up here. This is virtually an 89 bounce. Why wouldn't you have taken it? Look at your zero lag, traders. See it up here? So you're continuing. It disqualifies itself. Then down here, you're in on this particular candle here. You had a T7. Excuse me one moment. Then so we can see here we had a lovely little double top, a T7 and divergence. Once again, go back on your charts, have a look at where you get these double tops, these T7s, but and divergence with the trend. They're just golden trades. Now I might as well just talk about this very quickly. As most of you know, I have around 12 different key setups that I use. I once again go on and on about focusing on your T1s and T2s and nothing else until you develop what we call blink or reflex action. You know, there's a great book written by a guy called Malcolm, I've just forgotten his, Gladwell I think it is. It's called Blink, and he talks about this guy that goes into a museum, looks at a piece of art that had been bought for millions of dollars, and in a blink of an eye could tell it was a fake, where it fooled all these other people that had decided to buy this piece of this sculpture, yet in a blink of an eye he could see the setup. Traders, what I want you to do is to really be able to develop a setup that you can see it in a blink of an eye. That is when you start to trade it. The other thing is though, is because if you're trying to trade two markets at once, as you hear me say every session, he who chases two rabbits catches none. Because you've got so much action happening here, you'll just miss out on so many great trades. Now this is a case, actually let me turn on my dome here. This will be good for you to see, and this is a great example here. So what we can see here now is some of my trade entries. So with TradeStation, for those of you that don't know, you can actually turn off the screen so you can see here, and you can turn any trades or your trades back on. But you have another function here, is where I'm trading 10 lots, and here you'll see I entered for 20. On the screen you can have it, which gets annoying, and I've got it turned off, where if you go to say place 20, it'll pop up on the screen for a confirmation, or if you place any more than 10 or whatever your lot size might be. Sometimes and what happened here, I double clicked the button and we had a slight outage on the internet, and I entered the trade with 20 contracts. As you can see there, where normally it's a 10 lot is my trade amount. Now here in this particular case I wasn't worried about it, but at the time when I was doing the lesson, as I said to my client, look, normally speaking, if you had have done that, you would have exited the trade. I was still under my 2% rule. It was a T7 with the trend, so I'm quite happy with that. So I'm very confident on that. But traders, please be very careful. Now here on this, in other words, be careful when you're, make sure you got the right amount or the right number of lots to trade, put it that way. And maybe until you get to know your trading platform, you have the confirmation come up. But in a fast moving market, that can be annoying. So let's just talk about how we targeted 15 ticks and why we targeted 15 ticks. This is where I was talking about, let me get rid of that right now. So you can see my swing low here. So I thought, okay, let's go for the closest swing low, because I thought, okay, we're going to go down and test that low if we don't go through it. So instead of going for 11 or 13, I went for 15 ticks, which is a few ticks above that low. Once again, I was front running, went down and it gave me the 15, bounced up before it went back through. So getting back to the point, what I'm trying to explain here is, and as I did one over here, you can see my low, and there it was 13 ticks. If you want to go for a larger or a higher target, this is one of the techniques you can use. Where is your closest swing low or swing high? Okay, but I recommend you front run it. That is, have your target 1 or 2 ticks above that, because quite often you'll come down, test that low and bounce up in a different direction. Now the what have I got here? We had a T89. Now here you can see price angle, see the angulation there, so it's a T89. Then we had a T7, we had a bounce off the 89 here. Now this and I ended up entering this very late. So what I've got in very late, target that swing low. I didn't get into way over here when actually I should have been in up here somewhere. So I was in late, still picked up the 13. Lo and behold, what's it decided to do? Continues on its merry way, which is what happens. But what made this deal, and the reason I decided to jump in, I'd already hit my target for the day, but I saw this. I had a beautiful T7, and what have I got here? I've got divergence with the trend. So I wasn't really looking at the time, saw I had great divergence, thought, right, I'm going to jump in on this and capitalize, and it was a very nice winner. So they can be really sweet. And down here, of course, we had a nice pivot bounce, and you can see here we've got great divergence and a pivot bounce. Once again, these are the sort of trades that we really love. So remember, we've got tomorrow the FOMC day and also crude oil reports, so there's going to be a lot happen in the marketplace. Now what I am going to do is just pull over. I'm just going to put this on hold and pull over the YM screen for a moment. So traders, what I want to point out here is this is the 89. This is an 89 tick on the YM on the Dow. Now the Dow is $5 a point. So a lot of traders love it. You've got a fair amount of, or a lot less volume than what you've got on the NQ. Yet you still got traders that love it. You go and try to place a 10 lot at market, you'll get always slippage, in my opinion. Well, I always seem to get it anyway. Now what I wanted to point out here, this is nearly now look at this here, from 5 a.m. till, look at this chop you had here, where on the NQ you had a fantastic amount of movement in that hour. So I generally find that the YM, you don't get I just don't think it trends as well. It's a lot more choppier, it's a lot more jagged, etc. Now, so that's the 89. Remember, on the NQ I trade the 133, while you've got a lot more volume. I know a lot of traders that actually trade the 89 tick also on the YM, but for me it just moves too fast for my liking. That's why I really don't like trading the YM all that much. So traders, another huge day in trading the NQ, and a couple of the other markets were just fantastic. Now, taking the trend trades, remember we had some very strong trends. Fantastic day. For those that you and this is what I want to bring up also. So of course, the disclaimers, because I'm going to show you some potential profit figures here. So the CFTC rules on my YouTube channel, etc., you'll see all the disclaimers, so please read those. Once again, this is really about risk management. That's what our business is really about, traders. Trading is a great way to earn a living. It's financial freedom. A couple of critical things I wanted to bring up here. Number one, please keep a trade journal. Now don't hang up, because I'm going to cover some important things, okay? So please listen to what I've got to say for a moment. Keep a trade journal. I keep a trade journal on every trade, why I entered it, etc. That's really important. Remember, trading is a business. Have a business plan. Now, as most of you know, I'm a sniper trader. That is, I'm looking for certain trades, and I've got a very definite target in place. Now, if you've got a $10,000 account, the maximum risk you would ever have per trade is 2%, or total exposure in any one trade. Now, if you're trading, say, the YM, and you've got a maximum of a 13 tick stop, which is my maximum stop, which is $65, you can be trading 3 contracts. Now, if you're targeting $100 a day, only $100 a day, which you're going to achieve, as you can see there, just trading it to T1s and T2s virtually every hour, that's $1,500 a week. 150 a day, that's $2,200. 200 a day, that's $3,000 a week. Traders, you can become wealthy in this business. However, let's be conservative for a moment, and what I want to quickly do is just, in your business plan, to consider this. If you're a new trader, if you have $10,000, there is no way known I want you trading with $10,000, please. You are going to make mistakes, like I showed you on the trading dome that I made today. You're going to go long when you should be going short. You're human. You are going to make mistakes. And remembering from day one, what we want to do is we want to build our psychological strength. Too many traders are going there, okay, I'll risk a little bit and it doesn't matter if I make a few mistakes. Well, traders, it does, because you do psychological damage to yourself. So let's be really conservative here. Okay, maximum of 2% risk. You net only $100 a day, 3 days a week, because let's just say you have a lost day and the other one is to you get your losses back. That's 9% per week. Okay, if you're going for 200 a day, 3 days a week, that's 18% per week. You double your account in 6 weeks. Traders, I believe not enough traders look at this as a business. This is a long-term career. What this means to you is financial freedom for life. What other business do you know that you can enter with, say, under $5,000? You can be underway and trading like this. Yes, you're going to have lost days, and if you just pick your T1s and T2s and just trade with those, they're going to be few and far between. So traders, please be conservative. I want to be your success coach. I want to work with you in helping you make a successful career. I want to create history. I want to do something that no other success coach has done in the trading industry. I want to have an incredibly high percentage of traders make money. So if you want to find out more about my fast track coaching program, my strategies, my indicators, now by the way, my indicators are for TradeStation. I give you the settings so you can set up virtually identical indicators on other trading platforms. And very soon I will be launching the live trading room. I've just got a major client I've got to finish a contract with before I can get the room underway, but we'll be open about 6 hours a day. So please, any questions, drop me an email to trader@iamadaytrader.com. anything about what I do, how I do it, and please subscribe to my YouTube channel. And if not today, I'll see if I can get one squeezed in. It'll be tomorrow. I'll knock out another video on day trading the Forex market. We had some great trades there as well. Thank you, traders.